Investors have again been shaken by the latest development in Europe's debt crisis. Italy has had its credit rating cut, reigniting fears that Europe's problems are spreading. Italy is the sixth European economy to be downgraded this year. The news undermined both the Australian dollar and the local share market. Here's finance correspondent Philip Lasker.
Another day, another downgrade. Credit ratings agency Standard & Poor's downgraded Europe's third biggest economy, Italy, and the shockwaves hit many markets throughout Asia.
What it shows is the stresses in the European debt crisis are now starting to spread to the larger economies.
The market is saying Italy's broke, and that forecast can make Italy broke.
The Australian share market lost another 1% today due to fears Europe's mess would trigger a global recession, which would be bad news for Australia's resources trade.
Certainly there is selling of some of the key commodities, which is obviously again putting pressure on the Aussie dollar. So we may well be talking another test of parity or below in coming days.
The Australian dollar fluctuated wildly against the US currency, dropping below 102 US cents at one stage. Then it firmed briefly after the Reserve Bank's September board minutes were released. It reinforced the view that the debt crisis is weighing more heavily on interest rate decisions, but the bank says it's well placed to move rates up or down if necessary.
I think at the moment it's hedging its bet.
I think they should be cutting now.
Scenes like this don't inspire confidence. Greeks are growing angrier as the austerity measures get tougher, while authorities grow more impatient at the speed of reform.
The ball is in the Greek court and implementation is of the essence.
It all leaves helpless global investors feeling decidedly anxious.
Very nervous, very concerned about Europe, not convinced that they're going to find a way to fund Greece.
Uncertainty remains the only certainty. Philip Lasker, ABC News.